As stewards of God's resources here today, we have a responsibility to ask, how do we use these opportunities? Business owners, are you going to invest and reinvest the money that you've saved into creating an environment where people can work and to flourish and to thrive in that place? And workers, will you seize the opportunities that you have to go out there and find a job that you actually enjoy and love and feel like you can really glorify God in whatever it is that you're doing? Are we taking hold of these opportunities? Welcome to Stewardology, a podcast where two worlds collide. In this show, financial advisor Tim Russell and Pastor Drew Gysi are joined by me, producer Tyler Rutherford, to explore the intersection of financial stewardship and theology. Their unique perspectives help Christians and churches understand and apply a biblical framework for everyday financial decisions so Christians everywhere can grow in their walk with Christ through biblical stewardship. Before we get started, we just wanted you to know that the topics discussed in this podcast are for general information only and are not intended to provide specific investment advice or recommendations. Investment and investment strategies involve risk, including the potential loss of principal, and past performance is not a guarantee of future results. Securities and advisory services are offered through Genius Wealth Management, member FINRA, and SIPC. Without further ado, here are your hosts, Tim Russell, Drew Gysi, and Tyler Rutherford.
Welcome to this episode of the Stewardology Podcast. We are so glad that you're taking time out of your schedule to join us for this time. I'm here with my co-host, Tim Russell.
Hello, hello.
And Tyler Rutherford.
Hi.
And today we're going to be diving into another one of those great hot topics about that one big, beautiful bill. Tim, can you say it a little bit better in your Trumpianism?
The big, beautiful. That's not a Trump.
That's not a Trumpianism.
No, man, this is the big, beautiful bill. It's so beautiful. We're going to win. We're going to keep on winning. We're going to be so tired of winning. We're winning so much. It's just beautiful.
Somehow that sounded like a combination of Trump and Biden. That was impressive. That was impressive.
Yeah.
I'm not going there. But as we just talked about, this one big, beautiful bill, the question that we're going to be asking today is, are these handouts just for billionaires and millionaires, or are they rocket fuel to move this economy in greater, deeper, wider ways? You know, it's easy to see the headlines, and they're screaming about these tax breaks that are happening for the wealthy, and that the rest of us are going to kind of fall by the wayside. And that's the rich getting richer, the poor getting poorer. But is that really the story here? What if these policies could actually be like that phrase, a rising tide lifts all boats, instead of just the yacht only? So that's our goal, to kind of take our time and look at this together. Proverbs 16:3 says, "Commit to the Lord whatever you do, and he will establish your plan." So as we discuss these economic policies, let us commit this time to the Lord and ask him to give us guidance and wisdom as we look at these policies that are coming our way today and in these upcoming years. So what does this bill do? Tim, I'm going to point the finger at you because you are a business owner.
Sure.
So talk to us a little bit about this.
So, the topic, right, is that this bill is simply a tax cut for the millionaires and the billionaires. And when they say that, what they're really looking at are the provisions that affect businesses, because the presumption is that anyone who owns a business is a millionaire and billionaire, which is largely not true. Yeah, most people who become wealthy in America are usually wealthy because they have owned businesses that have been successful. So I certainly don't deny that, but what I'd like to do is take a look at the provisions in this bill specifically geared towards business owners, and let's talk about what those provisions are and whether or not they're just some kind of a handout to the rich, or whether they're potentially also beneficial to other classes of individuals. Let's dive in. The first one we talked about a couple episodes ago was the Qualified Business Income Deduction, QBI. The Qualified Business Income Deduction is a below-the-line deduction. So this is after you get your itemized deduction. You then get to deduct, under this new big, beautiful bill, you get to deduct 23% of your business profits. Now, this is specifically for people who are filing Schedule C self-employed income. So Schedule C is a kind of like a small sole proprietor kind of a deal. So those individuals or people with LLCs and S Corps. Generally not included in this would be something like a C Corp. By the way, C Corps are the big ones that you know about. That's Apple, Amazon, Netflix, Google's. Those don't get QBI. It's pass-through entities like your Schedule C self-employed individual, your LLC, and your S Corp, because those are all pass-through entities. The income passes directly through to the tax return of the business owner. So what happens? If you made $200,000 in profit, you get to deduct 23% of that against your income, which is a substantial discount. Why are they doing that? They're doing that because they know that business owners are taking substantial risk in employing people, in creating opportunities, and doing things to drive our economy. They do this because they know business owners, if they have more money, are more likely to pour that back into their businesses, into hiring people, into purchasing more goods and services, which will make their efficiency even greater and potentially even higher revenues, higher tax rolls. So this is not an immediate help for the tax return or for the tax revenues for the government, but this is a kind of build the base, will increase long-term, moderate to long-term tax revenues for the government as this money works its way through the economy. The money going into the hands or into the pockets of these business owners typically doesn't just sit there and make them richer. Typically, it's invested back into their business or invested into other components or other consumptive components within our society. So the money does end up getting into the hands of other people.
So a good example would be the small town, hometown baker. And that baker chooses now to take advantage of this qualified business income deduction, and they are now able to hire an additional worker that could maybe either stay a little later or work a little earlier, or upgrade their equipment, thus boosting their productivity. And so you're getting better equipment, more productivity, another worker. What does that mean for the community? More product, more sales, possibly.
Yeah. More revenue.
More revenue across
for
the
the
board.
business and also for the government.
Yeah.
So the next item that's focused on businesses is this Section 179 deduction. Please don't fall asleep when I say Section 179 deduction. All this means is it allows businesses to deduct 100% of certain expenses up to $2.5 million for things like property purchases, or actually for property like equipment, vehicles, and machinery. I misspoke when I said property purchases. In other words, without the big, beautiful bill, I go out and I buy a truck for my plumbing company or my roofing company, or I buy a piece of equipment that I need for an excavator or something like that. I need to buy, some improvement or some product to be able to do business. I would have to take that expense. I don't get to deduct all of that expense against my income. It goes on my balance sheet, and then I get to depreciate that item or deduct that income from my future, the expense for my future income for like 25, 35 years into the future. So you spend $100,000, $200,000 on a piece of equipment, you aren't going to see any benefit. You still have to pay taxes on that money, even though it's gone. You spent it. You invested it into your company. Under the big, beautiful bill, this incentivizes businesses to go out and to purchase equipment that will make them more revenue, that will make them more efficient, that will make them more productive, because they get to deduct all of that expense right away against their tax bill. So this is going to lower revenue to the government, but it will also increase revenue to the government because that money is going into other businesses and that shows up on their tax rolls and their revenue lines. So it will eventually help to boost the overall economic output of our country and the tax revenue of our government. So this is not just a handout. This is a big beautiful, helpful thing for businesses and for our economy as a whole, and ultimately will be a helpful thing for our revenue base as a nation.
And this should turn things around, not super long term, but there should be some pretty close within a couple years impact on this. Am I correct in saying that?
Oh, absolutely. I don't think that it's going to take us very long to see the benefits of this impact. I honestly don't love the idea of depreciating assets for long periods of time. I think it's very detrimental to economic and business activity. I think we should be able to deduct the expenses that we have for business-related items in that year. Remember, it may result in a lower revenue or taxable income in one year, but that means that expense is not going to be deducted the next year. That means their income will be all that much higher, and you have that equipment or the vehicle or whatever it is to be able to even make more money, more revenue. So it's going to increase tax rolls down the line. And it's not going to take a long time for us to get there.
And it could be a reciprocal thing where year after year, the business owner is investing more into their company to be able to be more productive, to hire more people, to expand the business.
Yeah.
I think this is a big win across the board.
Yeah. It really could be rocket fuel for our economy. So there's another expense or another benefit to businesses that I'd like to address, and that's what's called a 100% bonus depreciation. And this, again, can act like a game changer in a lot of ways. So unlike the Section 179 deduction that we just talked about, that has certain limits and so forth. This bonus depreciation lets businesses deduct the full cost of qualified assets with no dollar limits. Now, this applies to larger businesses, larger corporations. This has substantial benefits for them when they're building infrastructure for their business here in America, manufacturing, warehousing, just all kinds of ways in which this can be enormously helpful for our economy. So we're dealing with, this is something that usually, it's not only major corporations, but usually the big guys, they're going to be investing hundreds of millions of dollars in plants and equipment here in America. And that will result in numerous jobs for individuals building these facilities and numerous jobs for people employed in the work in these facilities. But they'll be able to deduct the entire expense for the building of that property right away. So it will have a lowering of the tax revenue initially 1 year. But because they're now doing more and being more profitable, they will increase their tax revenues long term, which will be enormously helpful. Again, the budget office does not do a good job estimating or calculating what the potential tax revenue generative items these may actually be. They only take it as a reduction in revenue. They don't see the substantial potential long-term benefit that this could have for our broader economy and for our tax rolls. This could seriously help reduce the deficit and employ more people, getting people off the couches. We talked about that in our last episode. We're talking about the work requirements for Medicaid. Let's get some of these people working in some of these jobs. There's going to be a greater demand for employment. And these are going to be high quality jobs in many cases that are paying much more substantial wages than what one would get on the welfare rolls. So if you're able-bodied, you're able to get out there and do it, this is a phenomenal thing.
So let's address the question that is kind of based on this episode. Okay, this is going to allow businesses to grow, and that's a good thing. And let's just address it. Aren't the billionaires going to get richer? Let's process that. So the common argument is the tax cuts are just a giveaway to the ultra wealthy. And I think we've already kind of tore down that narrative, but I want to go into why we don't necessarily agree with the pop culture narrative of this bill. So it's true that like high earners will benefit from some of these provisions. Like if we're thinking about business owners, and that's a good thing. The story doesn't end there. But as we've seen in the past couple episodes, the way the tax brackets are structured out and the way the certain credits are rolled out, this actually really favors a lot of low to moderate income earners across the board. And obviously, we have these incentives here for business owners. So, Tim, why don't you take us through some of these points here that we have? Like,
Yeah,
why is
yeah.
this important?
So, just keep the law of large numbers in the front of your mind, right? When you are making $1 million and you have a 5% tax cut, that does result in about a $50,000 savings. So, yes, someone making $1 million experiencing a 5% cut is going to save $50,000. But if you're looking at someone making $100,000 who receives a 10% tax cut, that's only going to save them $10,000. So we recognize just because the amount of money you're making is larger, even though you get a smaller reduction in terms of real dollars, it's going to be a bigger number. I acknowledge that. So yes, to some extent, these tax cuts are going to favor the wealthy class. It's entirely possible. But that's also disingenuous to the broader impacts of these cuts will have in terms of spurring economic activity and creating more jobs for American workers and getting and raising more people out of the poverty and into the middle class. That is not something that we should diminish at all. And ironically, I believe it is this kind of tax bill that's more likely to create more middle-class Americans than anything Obama did. I said Obama, but I also mean Biden. They gave away so much. They were just giving, and it doesn't result in raising anyone out of poverty. In fact, what their policies did was enslave them into poverty, where they wouldn't want to make more money because they'd lose their benefits. Now we're putting out not just requirements for people on the lower end to work, but also a massive surge in new business and employment opportunities through a lot of these tax cuts that are going to help more Americans reach that middle class status.
You were talking earlier about a 5% for a millionaire tax cut, or a 10% for someone who makes $100,000.
Correct.
That additional $10,000, that 10%
Meaningful.
for that middle income person is an amazing type of savings for an individual or a family. That's a huge number for that individual.
It's a bigger slice of their pie.
It is.
Back.
I mean, it's a 10% slice of pie. But boy, wouldn't that be great to be able to wake up tomorrow morning and know that it's going to be better for you tax-wise, that you're going to have more money in your pocket. You're going to be able to do things differently for you and your family.
So just as we continue to think through this whole question, making billionaires richer, just keep a couple things in mind. First of all, there's a risk and reward element to life and to business. It is the billionaire class, the millionaire and the billionaire class, who have taken a lot of risk. And sometimes they've put their entire financial lives at risk to take this opportunity and have been successful, and they've reaped a reward. If you don't take any risks, you won't reap any rewards. So for our audience, you're sitting here, you're trying to figure out, how do I grow? How do I get out of the one class I'm in, maybe into another class? How do I raise my income? Guys, working works. Taking risks, it's got to be wise, it's got to be prudent, but taking risks is how one has the opportunity to even grow. So if you take risks as a business owner, you should be able to benefit from the rewards of profit. That is just a fundamentally good thing. Profit is not a bad word. Mm-hmm. Profit is a good word. It rewards people for taking risk. It rewards. And what are those risks? Most of the time, those risks are employing people, hiring people to do work and paying them out of their own pocket. That's a risk. And that's a risk that can absolutely result in significant profit down the road if you do it right. So again, I have no problem with the risk and getting reward. Now, there are another thing. I talked about this already. We talked about the downstream benefits. When business owners save on taxes, they often take that money and pour it back into their business, generating more revenue, more income, more productivity, and more employment. And all of those things have trickle-down opportunities. Now, I know trickle-down economics has gotten a bad rap. It got very popular during the Ronald Reagan era with trickle-down economics. But there is absolutely an element of that is true. This downstream impacts of the fact that the spending that millionaires and billionaires do when they have a tax cut will benefit businesses and will benefit employees as they're hired and able to do more work. That's a good thing.
Yeah, it's just so our audience knows too. Like, I'm the younger of the millennial generation, and one thing millennials love to do, I've noticed, is harp on how bad billionaires are, right? But let's keep this in mind for a second. There's only about 900 billionaires in the United States. Might seem like a lot. Guess how many small businesses there are in the United States? 33 million small businesses. The reality is this bill impacts a lot more people than just billionaires, right? This impacts your small town baker, as Drew said. This is your coffee shop, your contractor, the people that are actually like bringing value into your life. This is going to do a lot of really great things for them and for your community, and allow them to hire people and do all the downstream benefits that Tim was just talking about. So stop worrying about the billionaires for a minute. Like, think about your actual community, the people that are like doing the good work.
Yeah, and remember, if it weren't for the billionaire class, you wouldn't have your iPhone to be tweeting on.
Yeah, there you go.
I mean, guys, come on. Yeah, you go and vent about the billionaires, and we are reaping the rewards of their labor.
Yeah.
Talk about downstream impacts. Mm-hmm. These guys and girls have created massive environments and have made our lives better. Arguably, I'd say better. There are some ways
depends
it's
on how
worse.
much time you spend on that device.
Depends on what we're talking about
how
here.
much time and what you're looking at.
These are good things,
Yeah.
and they do make
Agreed.
society to some extent better.
So why are all of these things good for the economy at large, Tim?
Well, it incentivizes investment. It's very clear. We're incentivizing people to invest in purchasing equipment, building infrastructure, building out their employment base. It is incentivizing investing rather than penalizing investing in this economy.
And also in this country, not farming it out overseas.
Correct. In this country and in their own business environments.
business.
That's correct, yes. It increases the velocity of money. The velocity of money is a concept where how fast does a dollar, I earn a dollar, right? And I give it to Drew for compensation for his work.
Yay.
Drew takes that dollar. How long does it take for it to trickle through the economy?
I got to get gas on the way home.
The faster that velocity is, the faster that money goes from my pocket to Drew's pocket to the gas station to the gas station attendant to the rent or landlord to, that money, that dollar flows through the economy in a certain way. And the faster we get that going, the more productive and the more wealthy our nation is. So this incentivizes moving money, not just having money sitting stagnant on the sidelines, but putting it to work. And when we put it to work, that just helps speed up the velocity, the speed at which the money goes from one hand to the other hand to the other hand, which is a rising tide, which lifts all boats. That's a good thing. Which then leads to job creation, right? That's the third way in which I think this could be really good for the nation of America and the broader economy. We're incentivizing investing. We're increasing the velocity of money. We're creating jobs. With 33 million small businesses here in America, those 33 million, if they all went out and just hired one person,
huge.
That's 33 million new jobs just out of this bill. And I guarantee you there are a lot of companies out there who will hire well more than one person. So, and that's only the small businesses. Think about what the big businesses are going to do with some of the deductions that they can also get. Mm-hmm. They're going to be hiring potentially thousands of people. So there are substantial benefits in creating jobs. And then what about addressing labor concerns? Some worry that stricter immigration policies could lead to a shortage of labor, that particular industries that are reliant on undocumented workers, maybe like the hospitality sector or some others, agriculture, construction, some of these individuals or these businesses could really see a pinch with their labor. They may have to actually cut back on their labor force because they've been hiring illegal immigrants, whether they're known or unknown illegals. We believe, however, that the economic juice from these tax cuts will create such a strong demand for labor that businesses will seek American workers, train them as needed, and put them to work, that unemployment rolls will probably decrease. Actually, I think temporarily we could see unemployment rolls increase slightly as we have people entering the workforce. Here's the thing. The unemployment rate are only people who are unemployed and who are looking for work. Now that we're having Medicaid and Medicare, or Medicaid technically, having work requirements, we have potentially millions of people who are able-bodied working age individuals now entering the workforce looking for a job. They now get counted. They will temporarily increase our unemployment rate because they're looking for jobs, but there will likely be a substantial swell of jobs available for them as we reduce the amount of undocumented workers in our society and we increase business opportunities. So I don't think the labor concerns that some have are as warranted or as justifiable of a concern as what it'll likely work out to be. Does that make sense to all you?
That's interesting. Yeah, that's really interesting.
Yeah.
So as we wrap up today's episode, let's reflect on a little bit of what we have uncovered. These tax cuts aren't just for billionaires, right? They're for business owners, and there's a lot more business owners in the United States than there are billionaires. So it's about creating an environment where more people have the chance to thrive, right? To fulfill God's calling in their life, to work, to do good work, and to get out there and to earn an income and provide for their family and increase the velocity of money, as Tim was talking about. These are all good things. And so we think that these policies will actually be fuel for the economy. It's not just a tax cut favoring one class of people. I'm sure we see a little bit of that here and there sprinkled across this bill. But at the end of the day, I think there's a lot here that could help create an environment where people can thrive and work and fulfill their calling. As stewards of God's resources here today, we have a responsibility to ask, how do we use these opportunities? Business owners, are you going to invest and reinvest the money that you've saved into creating an environment where people can work and to flourish and to thrive in that place? And workers, will you seize the opportunities that you have to go out there and find a job that you actually enjoy and love and feel like you can really glorify God in whatever it is that you're doing? Are we taking hold of these opportunities? And at the end of the day, are we as citizens going to do the good work of holding our leaders accountable? And if you don't like something, we live in a country where we can call our representative, right? And make our concerns known, and we can pray for them and do all of these good things. We're not helpless, right? We see a lot in the headlines that people like to play the victim card and sit on the sidelines. We don't want to do that here. We want to take an active role in not only working, but for business owners, employing, growing. And at the end of the day, we can't rely on the White House to save us from the hole that we dug for ourselves, right? We have to do the work of being diligent and being responsible and being wise with what we have been given and with what we've been entrusted with.
We want to say thank you for taking time out of your schedule to join us in either watching on YouTube or listening to the Stewardology Podcast. As we wrap up this episode, until next time we meet, remember this. And whatever you do, whether it's in word or whether it's in deed, do it all in the name of the Lord Jesus Christ, right from Colossians 3:17. Thank you, and God bless.
Thanks for joining us on the Stewardology Podcast, where financial stewardship and theology meet. We'd like to help you take your next steps in biblical financial stewardship. Subscribe in your podcast provider to get the newest episode delivered to you every week. Leave a 5-star rating and review to help new listeners find the show. Take advantage of your free personal stewardship review at stewardologypodcast.com/review. Be sure to follow us on social media and visit our website at stewardologypodcast.com for tons of free resources and hundreds of free episodes. You can also leave episode ideas at stewardologypodcast.com/idea. Remember, Psalm 20, verse 7. Some trust in chariots and some trust in horses, but we trust in the name of the Lord our God. See you next week.